Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, a big shake-up overnight with the US dollar index plummeting further was all started by comments from the US Treasury Secretary Steven Mnuchin after he said that he welcomed a lower US dollar and that US is open for business. His comments break with usual US government practice after advocating a stronger US dollar. Speaking at a press conference at the World Economic Forum in Davos last night, obviously the weaker US dollar is good for us, he mentioned, and it relates to trade and opportunities, adding that the currency short-term value is not a concern of ours at all, which is very interesting considering the fact that the dollar index is now plummeted to a 4-year low of 88.93. Looking at the Australian dollar, first of all, the market has rallied on the back of that, on those comments, and printed a high of 80.82, and that was the resistance in the report. Now being respected, and we are currently showing a mild pullback, could actually see the focus looking back towards the support at 80.25. You can see here there is bearish divergence, so I am a little bit skeptical at this stage of the rally overnight. Not as strong as the euro and the sterling, but nevertheless we could see into next week of the recent release of the Australian CPI report, which may show that inflationary pressures in Australian economy has soothed or simmering. This could mean that my recent rate call for this year holds in April if the RBA does stay on track. So look for the pullback today. Now a break of 80 tomorrow today and a close above there in New York tomorrow morning would give further concerns to a target of 81.5, but with the divergence still in play, I can't really commit myself to a bullish call as of yet. Well, the euro escalated very hard as the US dollar, as I mentioned, fell to a 4-year low, and the euro rallied to a high last seen around December 2014. Now with the rally has put further views that we could see a rise up towards the region of 124.15, which is slightly capping at the moment as a short-term view. The bearish divergence is just intact from the rally overnight, and if we have found a top around 124.15, then we could see a decline. Now later today we do have the ECB rate decision, and the market will be very keen to see if President Draghi does hint to a potential rate hike, but he would most probably, like most central bankers do, will try and avoid the subject, and any conversation will try and push it back towards early 2019. Well, it is disappointing that we didn't get buyers from 109.65 overnight in dollar yen, and from the break has given further concerns to the downside. At this present time, we could see a move towards a target of 108.80. Now, a break beneath there would give further scope to a target of 108.25.35. As the bulls do take about 4 steps back because of the break of the overnight dollar, as long as and also with the comments from the US Treasury Secretary Steven Mnuchin has put the dollar weakness across the board. So we are a little bit oversold from the RSI. So let's see if 108.80 can hold. A very, very impressive rally from the sterling, as you can see, and still hardly any conversation out there from the about the Brexit, with dry January still keeping very tight-lipped. But you can see the RSI is very, very overbought on the weeklies and extremely overbought on dailies. So it does make it very hard to get very bullish at these levels, even though we are pushing now towards the Brexit highs around 145 to 150. At the moment, if we see a break above 142.60.80, then it would give further concerns to the bull run and may look up towards 143.5 to 144.5. But as I mentioned, we are overbought. But if the bulls want to take this extra step or go the extra mile, then we could see that rally. Support on the day comes in at 139. 141.55, and then 140 to 139.5. Looking at the gold, well, the market broke through the level of 1,345 overnight and rallied further as the dollar weakened. At this moment in time, we are exposed to the upside to 1,375 and reassess from there, with immediate resistance at 62 to 66 and then 71.5. Support comes in at 53 and then 1,347. And to round off with the oil, well, the market is now challenging this level of $66 a barrel. It did get there this morning, but backed off slightly. Overall, I do expect to see this level hold, and if so, we could see a pullback to the initial support that comes in at 63.5. That does seem a long way away, but that's the next level I have. We can easily see a very sharp rejection from there. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the great day that's ahead.